Welcome back, traders and investors. We have Rachel Shasha on the line here. She is a trader and blogger at Sassy Options. Rachel, how you doing today?
I am fantastic.
Uh,
How
so
are you?
I'm doing good. So you're a graduate of UCLA and USC. So what do you like when you go to the football games? Do you sit on one side the first half and then the other side the second half?
Well, I would like to say that I root for UCLA because that's my undergrad, but really I'm just a fair weathered sports fan.
Okay, and what you get your degrees in?
Psychology.
Okay, and did you do?
So
And what was your graduate program in?
it was it's psychology, MST, so marriage family therapy. It basically a therapist.
It
Okay.
really can help actually with trading too when you can do the whole psychological perspective. It really ties into the markets because so much psychology goes into the market. You think that helps you with your trading?
Completely. That's what got me into it, to be honest.
You,
That when I was in my program, basically that's when the whole housing crisis came about. So it was perfect timing to start studying all the psychology of the markets.
Okay, and so you like to use you trade primarily the options markets,
Correct.
and it says here options pitting along with the technicals, and that sounds like a lot of really interesting stuff for our listeners. So I hope they're paying attention. First, let's just talk about what kind of technical analysis you use, what time frames, what kind of charts. Are there any special indicators that you use?
Mostly daily. And then I guess it depends on if I'm looking for a swing or, something real short, such as a weekly position. But that also depends on the environment we're in. So, like, the last 3 weeks have been very, what's the word? They've been amicable to maybe doing weekly. So I've been concentrating more on short-term trades, whereas, swing trades are better for a maybe slower environment where there's no momentum.
are you
But
looking
for
now?
technical,
I was just
yeah, I
gonna
would
say,
say daily is most. And I don't look for. To be honest, I'm not a big person on the ton of technicals. I don't know clouds and harmonics and all that, or whatever people look at. And I respect it. It's great, but it's not for me. Like I just want to keep it as simple as possible. Is the trend up? Is the trend down? Is there support? Is there resistance? Um, I look at some moving averages, but I'm not like too keen on those.
you keep it simple. Actually, on this show, we talk about that all the time. Is basically you have a lot of people, and I've been a prop trader for 15 years, and I've seen a lot of people on my specific company come in with some crazy technical indicators, and it just looks confusing to me. And I always say, just keep it simple: support, resistance, trends, and that's kind of how you approach it as well.
Yeah, it just gets too complicated otherwise. I've tried many different things and then just one signal says this, the other one says that. So it just starts to get complicated after that. So I just go with the basics for me.
Talk about some of your specific like option strategies then. Like how do you approach what if you're looking at the weekly options, are you looking at the overall markets in this uptrend right now? So are you looking at, buying on individual stocks? Are you looking at buying options on the SPY? What are you specifically what do you like to pick on?
I guess I like mostly the momentum. And for weeklies, I like those high beta that the Amazon, LinkedIn, Twitter, Facebook, Netflix, Tesla, those types for weeklies because they can move fast and they can move big. But in terms of strategies, right now and probably for the last year and a half, it's been pretty much just straight buying calls or buying puts. No spreads, no selling, nothing like that. I do think there's an environment for that, but right now with volatility so low and options so cheap and weeklies coming out, I just kind of stuck to that for now.
Oh, really? So you don't like to take, yeah, like you don't like to do spreads and take the other side of the one option, just in case you get a day or two of stagnation. That you're just figuring with the vol so low, you can buy your puts and calls and get, if you're correct on the technical call, you'll end up making money on them.
Right, because you know what? When I get into spreads and whatnot, I think I'm smarter than I am, and what I end up doing is the spread starts to work, and so I'm like, oh, you know what? I'll sell that part of it, and then roll that part of it, and then I start to change the spread, and then it backfires on me. So, yeah, if I just keep it simple, it's easier for me not to start trying to like outdo myself.
And do you pay attention to the open interest? Nick Shaheen, who was on our show yesterday, really pays attention to the open interest, and along with the use of that term pinning. Do you keep an eye on the open interest in the options?
Completely. I keep an eye on it every single day. I check on it. I graph my own charts for it. It's not. There's definitely a way to use open interest, and then there's a way not to use open interest. So it can get in the way if you're too stuck on it, especially on something like a weekly, or when the market is really trending hard, like in the last couple of weeks. You can get stuck thinking, oh, well, there's so many calls at a certain strike, so price is likely not to go over that. Whereas on a weekly and with a lot of strong momentum, that's not necessarily the case. But when it's a monthly, like for example, next week's, I'll pay a lot more attention, because when there is like a really strong buildup of calls or puts, it can often act as a wall of resistance or support, depending on, the environment. So now if there's an upgrade or there's some kind of news and whatever, Facebook is doing something great, and all of a sudden it shoots through all their, high interest calls, then it's forget about the open interest. It can happen. But often you'll find that it might, get close to the highest strike, but then back off, and maybe even pass a little bit, but then back off and never close above it. And I think that doesn't necessarily always help me in buying puts or calls and making money on them, but it can often help me to resist from chasing a stock, because I'm like, all right, well, the volume's not that great, the momentum's not that great, and there's a lot of calls right there, so I highly doubt it's going to close above that.
Yeah, because it's all a function of volume, right, too, because if, the open interest is high at a specific strike, but the volume all of a sudden takes off because of a news event, that's going to become a non-issue, as long as the volume's...
Not only will it become a non-issue, but often it could increase the rally, because the delta hedging that is involved in that. So if the market makers had sold you those calls and now they have to hedge their bet once it passes it, that could increase the buying. And then often I also notice that the call strikes will act heavier resistance than puts will act as support. So sometimes if things are falling, and the puts are not going to hold anything up.
Ah, that's an interesting point. So do you, just from a strategy standpoint, are you looking like on Thursday and Friday of the prior week to get positioned for the next Friday expiration? Or are you a gunner? You like wait Monday, Tuesday, and Wednesday, and then when they take a lot of the premium out, do you put your positions on Wednesday and Thursday, and then wait for some fireworks on Friday?
Both. So
Okay.
I definitely look at it ahead of time. So for instance, sometimes I can get clues into the market. So 2 weeks ago, I would say it was over the weekend, I was, there's probably 10 of them that I chart or that I graph every week on my own. And I look at them, and the thing is, I've been doing that for 2 years, so you start to notice a lot of patterns after that. So I noticed that one of them is GS, Goldman Sachs, and I noticed that for the first time in a really long time, and not long time, but I'm talking maybe a few months, I noticed the puts had built up, and I had not seen that in a while. And the last time puts had started to build up in GS, the financials started to go. And when the financials go, the market typically stays afloat or rallies. So that's actually one of the main reasons I was positioned for this last run-up that we just had, is just that open interest in GS. And, and then waiting for the proof, not just saying, okay, well, because GS has puts, now I'm going to, go buy the entire market. But then having a conviction once the market did start to rally because of that.
So were you thinking people were short the puts and were going to have to cover on a rally, or do you think people were
No, I don't even know. It's not even that. I don't even know if they were hedges or just outright bets. I have no idea. All I know is the pattern that I've
There you
seen for the
go.
last 2 years is when the puts build up in GS, the market rallies.
Wow.
And that's what it is. It's all about identifying little patterns and little edges, and you're finding a little edge by identifying that. You don't even need to know the reasons for that, but if you find that connection or that, obviously correlation there, it can really be advantageous for you.
Could you
Yeah.
just walk us through that Goldman Sachs play a little bit? I mean, it had were you in before the breakout? It had the 163.43 level for a long time. Were you in ahead of that?
To be honest, I didn't even play GS. I went to Citibank. So it wasn't even that I made money through GS, but what GS told me was that start to look for big moves in stocks. So then I was able to get into Amazon last week, and I was to LinkedIn yesterday. So,
Wow.
I was just ready for a rally. And I took Citibank actually, and used weekly options and made money through Citibank last week. But what GS did was just gave me conviction that if the market started to rally, that it could rally hard. And it gave me conviction to watch the financials, which I had not been doing for a couple months because they've really been out of play. But there's always that thought process that if the financials are strong, the market's not going to tank. And so it gave me the clue to at least watch them. And then it started moving. The financials started moving, and I was way ahead of that, which is good. What I did notice actually the last night is I looked back at the open interest on GS. And just for this week, and the calls have built up just in the last 2 days, substantially, which tells me that and we already know this, so it's just more proof that probably the momentum in this market is going to slow now because people are starting to believe in it, and that's just based on patterns I've seen in the last 2 years. Once people start catching on, then the calls go up again.
So are you approaching this market a little bit differently today with the pullback here? The financials are very weak here in the pre-market. We're pulling back 9 S&P points this morning, and now you're seeing, maybe the opposite thing happen in Goldman Sachs. Are you looking at this market a little bit more from the short side now?
No, not from the short side. I'm more looking from it as a buy to dip market right now. So
okay.
I'm not necessarily going to buy dips today. I don't know. There's always that saying too, which I don't know if it's true or not, but I like to go with it, that the market will put in a low the Thursday or Friday before options expiration, meaning monthly options expiration.
Mm-hmm.
So, I might look for some kind of reversal candles, tomorrow or Friday to start buying the dips for next week. But right now, right now, it seems as if we're in that kind of 2013 trending environment, and, buying the dips are good. And if it doesn't work, and I see evidence that tells me that it's not going to work, and then I will shift my strategy.
Okay, just a question in the chat room. I'll just address it real quick. Spice is asking what clued you in again about the overall call in the markets, and really it's just something from your observations for how long you've been in the markets now, 4 or 5 years or so.
Yeah, about 5 years.
5 years that she, what she had noticed over the past is that when there's heavy buildup buying into puts at Goldman Sachs, that there's either a rally in the overall market or in the financials, and she can't really quantify it, but it's something that she's observed. It's something that it's a tool in her toolbox, and it's just something from observing the market, Spice. So that's the answer to that. Well, Rachel, okay, go ahead, add something, please.
And I think that it's not. I mean, like I made that very simple, so it's like now, I can just go look at Goldman Sachs open interest and decide if we're going to rally or not. But there's probably a lot more that plays into it that I'm not even addressing. That's just in the back of my head from knowledge of other stuff. So, I also look at the SPY and the IWM and the QQQ open interest, and just all of it together culminated. I noticed those patterns usually mean rally. So it wasn't just GS, but GS was a big clue because it was something I had not seen in so long.
Okay.
But, it also goes with just whatever's going on in the environment. The VIX is low, people are unprepared. Sentiment is, people are waiting for a pullback. Everyone is either out of the market and, waiting for a pullback or short. So all of that combined is what led me to think we were going to rally. It wasn't just like one specific thing.
Okay, we're gonna have you on again and see, if we help us predict the downturn in the market. But we've had Rachel Shasha on. She's a trader and blogger at Sassy Options. She uses her psychology degree to analyze the markets, and we're really glad to have you on. And please come on again.
Well, thanks for having me.
Thank you, Rachel.